Welcome to Biz Wire. I'm Joseph Nordstrom in Beijing. China's economy continues to send the market mixed signals with stronger than expected trade data for January. Many analysts who thought China's Lunar New Year holiday would hold back January trade figures are skeptical, though, about the reliability of the statistics. They say the data could appear inflated from fake trade transactions, which has been a serious problem in the past. Fake trades are done as a way to bring in cash into the country and sidestep capital controls. In any case, though, official numbers on imports and exports climbed more than 5 times than expected. Markets had forecast exports to rise only 2%, but came in at a surprising 10.6%. The news helped to allay fears of a deepening economic malaise in the Middle Kingdom. Likewise, imports were expected to grow 3% and came in much stronger. Imports jumped 10% from a year ago as China bought record volumes of iron ore, crude oil, and copper. That lifted import growth to its highest level since July. The country's trade surplus rose to $31.9 billion, well above forecasts of $23.7 billion and December's $25.6 billion. Investors were prepared to be disappointed after a run of underwhelming economic data from China, which has come out in recent weeks. A China economist at Nomura in Hong Kong, Zhang Jiwei, says he finds this strong level of export growth puzzling, and it's unclear to what extent the strong data reflects upon the true strength in the economy. Reuters reports that fears of China slipping into a sharper than expected slowdown were believed to have fed a fierce sell-off in global financial markets in January. U.S. stocks got off to a rough start in 2014, but emerging markets were hit especially hard. The date for Chinese New Year goes by the lunar calendar and changes from year to year, so trends are often distorted early in the year, and it takes time for statistics to smooth out and give a clearer picture of the economy's real direction. Investors across Asia, though, welcomed the news and pushed stock prices higher for the 4th straight session. Markets were also encouraged by a relatively optimistic economic outlook from new U.S. Federal Reserve Chair Janet Yellen. Former chief economist at the World Bank, Justin Yifu Lin, says because of the global recovery, China's economy has the potential to grow at over 8% for the next 10 to 15 years. Most economists expect China's economy to grow at its weakest pace in 14 years this year at 7.4%. But HSBC says China is still expected to add twice as much demand to the world economy than the United States. Reuters says a resilient Chinese economy is good news for the world, particularly for major commodity exporters such as Australia and Brazil. HSBC also says China is already the world's biggest exporter, and it may overtake the United States to be the world's largest importer this year. While the numbers appear to be good news for everyone, many analysts are taking a wait-and-see approach. The official trade data contrasts with weak export growth reported by South Korea and Taiwan, which was attributed to the holidays and bad weather. Many remain cautious that the global economy isn't out of the water just yet. Economists at ANZ Bank said the round-tripping trade between Hong Kong and mainland China has once again picked up from the 4th quarter of last year, reflecting incentives to take advantage of high interest rates and a rising RMB. Statistics for industrial production, which are considered more reliable, will be released in March and should paint a more accurate picture of the real state of China's economy. You're watching Biz Wire on the Blue Ocean Network, China's first and only privately owned English-language broadcast media. Our full episode can be seen on our website, BON.TV/biz-wire. In just a moment, we'll continue with more insight into the big picture of China's economy.